Right, so do we buy in a company or do we buy in our personal name? Mate, what's your thoughts on that from a mortgage product perspective and availability? What's your take on that?
There are lenders out there who are quite happy to look at first-time buyers, first-time landlords who are also buying in a company. But of course, the more caveats you put onto a mortgage application, the pool of lenders reduces. However, the interesting thing is it doesn't necessarily mean you're going to pay more. I think from a fee perspective, maybe the lenders will charge a bit more in admin costs, or maybe ask you, like all sort of commercial lenders who specialise in helping clients with properties under a UK limited company, they'll ask the client to pay their legal fees. So there's that extra cost. But the reality is when it comes to interest rates, there's not much of a difference. And certainly in comparison to the rates that domestic clients in the UK would pay, it's comparable, it's just as competitive.
So in terms of product availability, there's more products of personal name than business?
Yes.
What, 80, 20, 50?
Of the 40 lenders that are available on a normal residential buy-to-let, I would say that reduces to say half a dozen.
Really?
Yeah.
Okay, wow.
Yeah.
So there's a big difference. But then that half a dozen that are lending for companies, I mean, they're some of the big people. It's not like they're going to run out of money.
Exactly. And again, and still offering competitive rates, and often offering the exact same rate that they're offering a residential buyer doing it in their own name.
Yeah, gotcha. So yeah, because obviously one of the big things we've noticed certainly is that a lot more clients are coming to us and saying, I want to do a company, or I'm already doing it in a company. I've already got a company set up. And so how do I get the funding? So is there a difference in the process of them getting a mortgage if they're doing it in a company?
I would suggest that when it's a new build purchase, what the lenders like to see is that the reservation documents, the mortgage application, and ultimately the title deeds are all the same. There are lenders who allow variations on the theme, but going back to that, then we're down to two. The lender pool is even smaller, and again, the more we ask from them, the more they charge.
So just to define that, so if I haven't set up the company yet, but I reserve in my personal name, and then obviously I want to set up the company and maybe exchange in the company name, realistically I should be getting the reservation document reissued in the company name?
Perfect, yeah. So there's a bit of paperwork and admin around that. It can be done.
No,
it's no problem. Yeah. And a lot of my clients will do that.
Yeah, so that's a good distinction actually. And in terms of process, because obviously you're becoming potentially a director and shareholder on the company, so you've got the company which you've got to get set up, which is pretty easy, memorandum of association, all that sort of stuff. But then is it the same stuff as if you're applying for a personal thing?
Everything's exactly the same. Because as a director of the company, the mortgage is ultimately still your responsibility. And so therefore there's a personal guarantee built into that, just like you would sign off on a regular mortgage. Okay. So you still have to provide the same documents, plus the company incorporation documents.
So you are actually signing off on a personal guarantee, even though it's a company separate. And then how does that must affect then when comes times to remortgage, or if you look to sell it, that new buyer, if they want to keep it in the company, is going to have to underwrite that personal guarantee as well?
Well, there's two ways that can work. You can sell the company structure, and so they buy the company and they take it over, and then obviously they would have to get their own finance on that. Or the company just sells the property on the open market to a regular buyer. So whatever suits the buyer best, really.
Yeah. I always was under the impression that the interest rate was going to be more than the personal name, which is good that that's sort of now not as prevalent.
But it's just the same as any regular bank. For 75% loan charges X and 75% loan charges Y.
And in the company, the loan to values are similar to the personal
Still
loan.
Available up to 75%.
Gotcha. Awesome, guys. Well, look, if you've got any questions about company versus personal in terms of the mortgage products, give us a call and we can chat through it. All right, guys. See you later. Bye.